Hey, this is Eli, aka Devoted Day Trader. On this video, I want to talk about why it's important to wait until traders are trapped to take a trade. I'm gonna use examples from today's trades to make my point. So today I traded a IBM and a QCOM, where I spotted traders who were trapped and took the other side. I will also briefly touch upon the other trades that I made. So IBM was the first stock that I traded today, and IBM was on my watch list because it was downgraded by an analyst, and I believe the stock was down about 2% or so. And I knew that a lot of people were short biased, and on the daily chart, I liked the fact that the 200 moving average was right above. It's been acting as resistance on the daily chart once, twice, three times, and I thought that it could potentially test this 200 moving average. So in the open, what I saw was this red bar, meaning that sellers are in control, and the short was triggered when the low of the first bar was violated. So a lot of people went short here, but they were in for a surprise because it didn't sell off. It actually bounced. So this second bar, the buyers dominated the second bar. So on the third bar, sellers, the people who went short here, they had one more chance to make a new low, and they didn't get far. And on the fourth bar, once I saw that buyers were clearly in control and the people who went short here, I don't know, for a 5-minute opening range breakdown or whatever the case may be, these people are trapped. Knowing that, I went long, and my target was actually the fill of the gap, but when we made it just popped up. I got in at let's see, at 136.58, and it gave me close to a dollar move. But when we made a double top right here, and constant lower lows and lower highs, and we had three red bars, I got out right here for a good profit. And then I noticed that it bounced off the 20 EMA, and the selling was just to shake people out. The people who went long here, to scare them out. And then once I saw that, and plus the people who went short here, thinking that it was gonna sell off, those people are now trapped. Knowing that, especially when it reversed and then it went above this bar, I went long again. So pretty much the shares that I had here, I put the trade back on with the hopes of reaching this previous closing price. And we made a higher high, and I got out once it looked like it was gonna, once the low of this bar was violated. I just locked in my profit, and good thing I did, because it did sell off. It would have, if I had held to my position, it would have tested my entry price, and this would have been definitely stressful. But this was the move that I was looking for. I knew, in fact, this entire week I've had a lot of success with just concentrating on stocks that are below a previous closing price, and waiting for them to fill the gap. I'm gonna do a video on that at some point, but this week I had a great week with what was it, with Goldman Sachs a few days ago, where it filled this gap. There's a stock called Five that just just went higher and higher. So I've been focusing on those trades lately. I'm gonna do a video on that at some point, because I think it's a very profitable strategy. So back to trap traders. QCOM was my second trade. QCOM was moving because it was upgraded, and on QCOM, this thing was just ripping, and I missed the opportunity to go long here. I was watching it, but I hesitated, so it moved without me. And then here, the reason why I went long here is because I knew that shorts were trapped. So we made sort of a double top with these two, and this bar right here, which was a slightly lower high. And considering that it was a lower high, shorts went short here because the low of this red bar was violated, which is the short signal. So people went short here, but it didn't continue to sell off. It actually squeezed up. So seeing that, I went long here, but I got out right here because for pretty much for a break even, because I did not like the fact that it didn't continue pushing higher, and it also rejected the whole number 96. But I kept watching it, and right here there was this big red bar. So now I know that, well, I knew that shorts were very comfortable, and willing to short. So people went short here as soon as the low of this bar is violated, that is the short entry. So people went short here, but they did not make much progress, and I saw this double top right here, these two inside bars at 95 75. I knew that the shorts, they would have to defend this price. If they can't defend this price, bulls, like the buyers, are going to know that the shorts are weak, and they're just gonna push it higher. So as soon as the high of these two bars were violated, I went long, literally at what was it, at 95.76, literally a penny above this a price that the shorts had to defend, and it popped up. I locked in profit at 96.12, locked in more profit here once the low of this 5-minute bar was violated, which is a short entry. So the shorts who got squeezed here, they're probably gonna go short here and try to make their money back. And I pretty much got out at the highs, because after that it pretty much sold off. So the key is anticipating people who are trapped. These so when we are trading, the one thing that I've been doing lately is I don't take the trade unless I know that people are trapped. And I did make a mistake on Snap. So Snap was another stock that I traded today. Where is this Snap? I actually removed it from my list because I thought it was a piece of trash, and I did not even know why I was watching it to start with. But with Snap, see, the stock was up about like 4 or 5% because it was upgraded, and I thought it could potentially test 20 on the daily chart there's no resistance, so I thought it could get up to 20. So when it pulled back to the 20 EMA, I went long at 1909 with a stop the low of these consolidation, and but I had no business taking this trade because like shorts are not trapped. In fact, I got trapped because saying that we made a new 5-minute high, so that's why I took a long. But then I got trapped, and knowing that the buyers were trapped, sellers pushed it down some more, and that's why it went down. So this one was a loser. It doesn't look like much. I think I went long at 1910, and I got out at 1902, so I lost about 8 cents, but I did have a lot of shares, so this one was a decent loser. So but I had no business taking this trade because the shorts were not trapped. I mean, they pushed it from here to here. They already made their money. The ones who went short here, well, no one went short here because this bar did not make a new 5-minute low, so there were no shorts really trapped, so that's why it didn't squeeze higher. And I did have a trade on pins, which was also a small winner. Went long here and I sold for a small profit. So these were the trades today. So the point of today's video is that in order to have a high probability trade, traders have to be trapped. If traders are not trapped, it's not going to move much because as traders, we are taking money from other traders, and those traders have to be wrong, and they have to take a loss for us to profit. So that's the way the game goes. And we definitely got to pay attention to the chart, and that's to the price action. That's something that I've been doing this entire week. I hate to say this, but like when we look at a chart, if we don't know what's going on, the odds of us making money is slim to none. Like with each tick, with each bar, we have to know what's going on, like who's winning, or who's in control, the buyers or the sellers. And then we have to wait until one side is wrong and they're clearly trapped, and that's when we're supposed to take the trade. If you have any questions or comments, feel free to comment below, and I will do another video at some point. Peace.